and you've seen this, the small businesses closing. There's too many fundamental problems that are disintegrating, real economic indicators that are disintegrating and will only get worse. It doesn't matter what the stock market says. And so I think that's not really good for demand. So the thing is, yes, the pandemic forced people, because what happened, toilet paper was, you couldn't get toilet paper. A lot of things were just, in a panic, things were taken off the shelf, canned foods, rice. That's the 2 or 3 day supply chain. That's all. It's an illusion. And what makes that work is oil, not electricity, not electric vehicles, not nuclear power. It's the trucks that move. That's the bloodline. When the trucks stop moving, then this just-in-time system really starts to fall apart quickly. And the idea that we're going to transition to something, if we were going to do that, we should have did that 25, 30 years ago. We've run out the clock now.
This is Donegan Kaiser, founder of Liberty and Finance. I'm now a licensed gold and silver dealer with Miles Franklin. Call me directly for the physical gold and silver that you need at the best price with personalized, private service from one of the oldest and best respected companies in the business. 30 years strong, A+ rated by the Better Business Bureau, 0 complaints, licensed and bonded, insured delivery or vault storage or IRAs, excellent prices, privacy and confidentiality, pay by check, money order, ACH or wire, satisfaction guaranteed. Call me directly at 419-819-9209 or my associate at 310-562-6400 or email us at kaiser@milesfranklin.com. Welcome back to Liberty and Finance. We have a first-time guest today. St Angelo is the founder of the SRSrocco Report. He's joining us this first time on Thursday, December 17th, 2020. Steve, thanks for joining us on the show.
It's great to be here, Donegan, for the first time, and you've got some excellent guests on your YouTube channel. It's always good to be able to talk about different things, and I'm looking forward to our conversation.
One of the things that makes you stand out among many analysts is your focus in the precious metals arena is not so much on the metals themselves or even the financial world. You have this overarching paradigm that you've helped people to see, and that is the vital place that energy plays. In fact, you talk about how energy drives the economy, not finance. Can you tell us how you came to that and why that's so critical for people to understand?
Sure, Donegan. When I first started investing in silver, and I bought my first 100-ounce bars back in 2002, and I remember the price. It was $4.52 an ounce. So I started buying the metals due to the same problems that most precious metal investors do, and that's the debt, the money printing, fiat currency, and so all these things are good reasons to own precious metals and continue to be. But as I researched more, and I found out that the price of the metals were kind of based on what they cost to produce them. And that's what you base a commodity on. But now you see the metals, gold and silver, behave differently than most commodities because a lot of the gold, especially gold, and a lot of silver isn't consumed. It's invested and saved. So you have to kind of value them differently. But that's the way the market has been valuing gold and silver. And that's why you've got that 70-80-1 ratio, because that's the different cost to produce gold compared to silver. It's about $1,200, $1,300 to produce gold. It's about $15, $16 to produce silver. So that's how the market is pricing them. But now when you understand the problems that we're going to face with energy, Donegan, the pricing of the metals will no longer matter what it costs to produce them. We're going to go back to the ancient times. Well, if you had 3 times the amount of silver in the society compared to gold, the value of the silver was 3 times less than gold. And that's how I see we're going to start transitioning to the metals becoming more of a store of value, which they are. But as the energy problems become more problematic, we're going to see that happen much quicker over the next 5 to 10 years. And so that's how I look at the industry now. my first analysis is energy, and then everything else stems off that.
When you talk about energy as the focus, there's a couple different aspects I think we need to talk about. One is the intrinsic energy, life energy, work energy, etc., that's captured into these stores of value. We've spoken with constitutional attorney and author of The Fruits of Graft, Great Depressions Then and Now, Wayne Jett, and he talks about the importance of the working man being able to put the value that he has created by giving up part of his life to do that work in his pocket, so that it's his and it belongs to him, and he can use it for a rainy day, or if he gets injured or elderly or whatever, just to pass on to his children. But that in our current financial world, most people aren't able to do that. They don't know that they're able to do that with, for example, precious metals. But instead, they put the fruits of their labor into the banker's pocket, and they're subject to whatever immoral policies that may come their way in terms of fees or negative real interest rates or taxation or whatever. So can you talk to us beyond that, why you consider metals or other real things to be stores of energy, and why energy needs to be the focus?
Well, I always say this, this is an experiment. For one day, do not use any energy. You can't go to work because you can't drive the car. Now, if you want to take your bike, you could do that, but you can't take a shower. You can't make breakfast unless you're just going to eat something like an apple raw. If you don't use energy all day long, you'll realize how important it is. We just take it for granted because we've tapped into this wonderful oil, which is the number one energy source. Matter of fact, without oil, right now you can't produce coal, because coal is extracted with diesel equipment. It's transported with diesel locomotives or barges or trucks. So the whole energy system in the world is based upon the oil. When the oil gets in trouble, so does everything else. We're seeing that in Venezuela. As Venezuela's oil production has collapsed, its electricity production is down 40%. So they go hand in hand. So it's important to understand the oil. Now, the reason why precious metals are a store of energy equivalent value, they actually don't store energy. What they do is they store the energy that went into producing them. And a dollar bill does not do that. That's why it has no intrinsic value. A dollar bill or a $100 bill costs 20 cents to make. And I show this graphic. If the Treasury prints 13 $100 bills, that cost $2.60. That's $1,300. That's the same what it costs to produce an ounce of gold. And so it only costs the Treasury $2.60, and that's real physical paper money. That's not digital money. So the issue is, the reason why a lot of people have put their savings, their hard work, and let's say their energy equivalent value, they're putting it into a stock market. That doesn't protect your wealth, because it's a Ponzi scheme. The gold and silver physical coins, they protect your wealth because of the massive amount of energy that went in to produce them in all forms and stages. Not just the energy like oil and gas and diesel or electricity, but in all forms and stages. Now, lastly, a mortgage, a home, a bond, 30-year bond, a 30-year mortgage, you have to work 30 years to pay that mortgage off. So the energy has to be burned for 30 years in the economy for you to have a job to pay back that mortgage. When energy becomes problematic, it's very difficult to pay back that mortgage. So the mortgage, the home, the real estate gets into trouble, bonds no longer work, and stocks are based upon future earnings. And earnings need growth in energy, growth in the GDP. So this is the problem, Dunnigan. But they are energy IOUs, while gold and silver, coins and bars are stores of energy of equivalent value. And most precious metal investors don't understand that. And that's why they do protect your wealth, whereas fiat money and stocks and bonds will not protect your wealth in the future.
Well, you've talked in the past about an energy cliff that you say is approaching, and I want you to talk at a very high level what the definition you give for the energy cliff and what you think the impacts will be. But before we get that far, at a simpler level, people have talked about peak oil and peak gold for some time now. Can you first give us an understanding of what you believe to be the physical reality of the realistic available future supply of both metals and energy? And do you see them already having passed a peak, or you see that there's more technologies and techniques ahead that are going to change that whole picture?
Well, silver may have peaked back in 2015. It's down from 800. It's down 100 million ounces from the pandemic this year. Gold was actually going to be about the same. Gold has been increasing since 2015. It hit a peak last year. It's going to be down a little bit this year due to the pandemic shutdowns. But if you go back 100 years and you look at a chart of oil production globally, copper production, silver production, lead, doesn't matter, gold, they all go up exponentially with oil. So oil is the number one factor that has driven the increase of production of all these metals, as well as the population due to farming. So now the issue is the peak oil theory. A lot of people say, well, these peak oil guys, done again, they get it wrong all the time. They said peak oil in 1970, peak oil. But there's when you get into the details, there's two things going on. There's the peak of conventional oil, which was reached in 2005. We've plateaued for about 10 years, 15 years. What is increasing is unconventional, which is very expensive. It has a very low energy return on investment and is not a long-term supply. It's allowing the party to go on for a little bit longer. When we peak in unconventional, then what happens, as Lucius Seneca, which is an ancient Roman philosopher, we hit the Seneca Cliff, because most societies, the growth is slow and sluggish, but the way to ruin is rapid. And if you look at most civilizations, they don't rise slowly and fall slowly. All civilizations in the past collapse. That's just the way it is. That's just the way it is. And so when you understand the energy situation with all the debt now, that's the problem. All this debt has been used to offset this falling energy return on investment. So right now, shale oil production, I have to tell you, in the last 10 years, the global growth in oil production was mainly U.S. shale oil and some Canadian oil sands. 85% of all the growth in the world was from U.S. Shale oil. And so now we're going to see the collapse of U.S. shale oil production because it's a boom and a bust. So I think the issue is now and then lastly, then there's the net energy. There's two things happening, done again. There is the peak and decline of physical barrels, and that's unconventional. And then there is the continual decline of net energy from that oil that makes it to the market. And that just gets smaller and smaller every year. And that's another factor that is not taken into consideration, which makes this coming energy cliff much more dynamic, much more steep. And the world is just not prepared for it.
What kind of impacts do you foresee to the world, to our economy, and to people's ability to have investments that even promise them any kind of hope of a retirement, that sort of thing, after this energy cliff is clearly upon us?
Well, if we make a comparable, the ancient Roman Empire had business cycles, and they had tremendous infrastructure, right? They had all there was 1 million people in Rome, all the buildings, there were commercial buildings, a lot of real estate, a lot of businesses. And so it was much simpler, let's say high tech. But it collapsed. The roads collapsed. The aqueducts collapsed. Matter of fact, let's say a century later, a lot of people who came across the aqueducts that were falling apart, they didn't even know what they were. Mm-hmm. So the history was forgotten to many people. And so the thing is, this is kind of what we're facing. The energy has allowed us to do all these wonderful things because oil allows machines to do 100 times the work that a human can do. That's what oil does. 100 times the work that a human can do. And it's all due to the energy. And so when the energy starts to fall apart, we start heading down this cliff. And this pandemic has given us a preview of that. Then real estate values get into trouble. Then stock prices actually become like a depression that never ends, even though you could see hyperinflation due to the Fed and central banks. And then a lot of the assets we're used to investing in, stocks, bonds, and real estate, they become increasingly less worthwhile owning. And that's when I see the light bulb go off to people. More and more people will get into the precious metals to protect wealth because they're very liquid. I see a world where thousands of suburban homes, there won't be the energy to maintain and run them, and they just won't have the value. Now, this isn't going to happen tomorrow, but over time, you're going to see the cities. We're starting to see it now. People are moving out of the cities, right, due to the pandemic, and they're moving to the suburbs. The next step is going to be to the country. That's the next step. That's going to take some years. But as the energy becomes problematic, people are going to leave the suburbs and start to move to the country, because the country, you can kind of take care of yourself. You can't do that in a suburb. You can now, and you will for a while. But as energy becomes problematic, so these are the things people have to start thinking about. And again, I'm not saying they're going to happen tomorrow, but over the next 5, 10, 15 years, it just gets a lot worse. And I see U.S. shale oil production collapsing by 75% by 2030. So that means the U.S. has to import more oil to maintain, and that's going to be bad news for the dollar. And so that's another issue that we're facing. And a lot of other countries are peaking in production as well. And so this just gets a lot worse within the next 5 to 10 years.
It's interesting because we've talked with several guests about the phenomenon of urban flight that's happening in our country. People leaving in droves from Los Angeles, Chicago, New York, etc., and heading out into less populated areas. It's interesting because a lot of the immediate justification that was the people's motivating, got them over the inertial energy to get going out of the city was civil unrest and the kind of lockdown stresses and so on that they experienced during the COVID policy period that we've all been through. But what you're talking about is that it's only plentiful energy that enables people to congregate in such concentrated areas away from their connection to the land, to the source of food and shelter and everything that nature and being close to the land provides. And that is what I'm hearing, is that without that extremely plentiful and cheap source of energy, people can't stay concentrated in those high-tech and with all those supply lines that have to be feeding in, constantly taking in food and everything else, energy into the cities and taking waste out and everything, that people need to get back out to the land eventually to get more connected to be able to sustain themselves, have a sustainable life.
Yeah, and I think the pandemic shutdowns, again, is a preview, because global oil demand, they forecasted in the middle of the year it would recover better by the end of the year, and it did not. It's actually almost 10 million barrels a day less. And I think they're forecasting the demand will return even better next year. It could, but I think there's too many fundamental problems. And you've seen this, the small businesses closing. There's too many fundamental problems that are disintegrating, real economic indicators that are disintegrating, and will only get worse. It doesn't matter what the stock market says. And so I think that's not really good for demand. So the thing is, yes, the pandemic forced people, because what happened, toilet paper you couldn't get toilet paper. A lot of things were just, in a panic, things were taken off the shelf, canned foods, rice. That's the 2 or 3 day supply chain. That's all. It's an illusion. And what makes that work is oil, not electricity, not electric vehicles, not nuclear power. It's the trucks that move. That's the bloodline. When the trucks stop moving, then this just-in-time system really starts to fall apart quickly. And the idea that we're going to transition to something, if we were going to do that, we should have did that 25, 30 years ago. We've run out the clock now. And so, yes, I think in time, Dunnigan, more and more light bulbs people are going to wake up that the cities are going to become their debt magnets, their infrastructure nightmares to maintain that consume a massive amount of energy just to maintain all this infrastructure that continues to erode and break down. Out in the country, it's much less. And so that's kind of the common sense logic that the cities are going to be very problematic to maintain, especially as energy production falls. And so people are going to be migrating out of big cities into the suburbs, and then they're going to migrate out of the suburbs because those take a lot of energy to maintain those as well.
If we could talk more going forward about the implications of your energy return on investment, EROI model, we have a question from H. Zilla who says, please distinguish EROI, which is based on financial framework of debt, profit, and loss, versus EROEI, which is based on the thermodynamics of costing more than a barrel of energy to pull a barrel out of the ground.
Okay, I'll explain that. The best thing to do, people, is to make things simple. Keep it simple, stupid. That's what I try to do. That's an excellent question. The energy return on energy investment is the number one equation that allows single cell organisms, plants, animals, humans, businesses, empires to survive or perish. It's the energy return on investment. Hunter-gatherers, on average, they expended 1 calorie of energy and they obtained 10 calories of food. That's hunter-gatherers. That's what archaeologists figured out. Some did much better. Some did a little bit worse. When we started gardening and we started farming with our own hands, the energy return on investment fell to 5 to 1. Because it was easy just to hunt a buffalo or to grab berries. That's easy to do. And then you have a lot of spare time. But now you've got to dig the soil. You've got to manage it and weed it. It takes a lot more energy. So, but you can actually grow more because now you're in control of the food. Now, if you add a horse or oxen, you lower the energy return on investment of farming down to 2 to 1 or less. But that's okay because you had a lot of forest you could knock down and you could feed the animals grass. Now, here's the clincher. The energy return on investment for the modern agricultural processing and distribution system today is 1 calorie of energy delivered to the market of food for 10 calories consumed by the entire system. It's a huge net energy loser. So what the question this commenter brings up is how we measure the energy return on investment of oil, and it's been falling. Back in 1930, the U.S. produced 100 barrels of oil for the energy cost of 1 barrel. Shale oil is about 5 to 1. So in 1970, it was 30 to 1 in the U.S. So it's continuing to fall. Now, a lot of this analysis is done by using dollars. They take the money and they take the costs to do these things, like what the cost for the pipe, what it costs for all these different things to make the shale well, and then they figure how much energy they're going to get out, how much energy they put in. But it's all based upon the dollar amount, and that can fluctuate and be off. So what he's talking about, the energy return on energy investment, is the actual energy. If you can quantitate the energy, and that's a different dynamic. That's the thermodynamics. That's more complicated, but in a nutshell, as time goes on, it takes more energy to produce that barrel of oil, and less of that energy makes it to the market. And I believe one of your other commenters said that if you've got 10,000 barrels of a high energy return on investment, isn't it better to have 1 million barrels at like 10 to 1? The problem is, and I'll answer that we have trillions of barrels of oil shale, which is out in the western U.S. That's in Utah and Wyoming. The problem is Shell and Chevron spent years trying to develop oil shale. It's basically shale. You got to crush it up and you got to extract oil from it. That energy return on investment done again is less than 2 to 1. That's just the way it is. Oil well in the 1930s, some of them were 1,000 to 1. Shale oil is 5 to 1. Oil sands is 4 to 1. Oil shale is 2 to 1. Methane hydrates that are off the coast of the world, they're like 1.1 to 1. Here's the problem with all that lower quality energy. The world needs about a 12 to 1 energy return on investment of oil to sustain all this stuff. You need 3 to 1 of oil just to have to produce the oil, to have an interstate or highways, and to have cars. That's all you can do. You can't have anything else. You can't have schools. You can't have businesses. You can't have hospitals. You can't have entertainment. You can't have airports. So the more you want to have in the society, the higher the energy return on investment of oil you need. So the problem comes down to, as the energy return on investment falls, it's not paying the minimum bills it takes to run the society, hence all the debt that's being used now to offset it. That's where we're at now.
There are several questions here looking forward to alternative sources of energy that might be game changers going forward. One person, Stefan Mark Skierbeck, asks about molten salt reactors. There's a few others about nuclear and so on. Can you talk to us about innovations in energy technology that might be game changers here?
That's probably the most answered question. Because you'll hear, we have thorium reactors, we have all this, the black light, all this high-tech stuff that's going to change the world. Well, here's the problem. You still have to mine the thorium. You have to transport that thorium. You have to spend all the research and development that takes decades to get a working thorium reactor. Then you have to develop all the infrastructure to build that plant and maintain those plants and the supply chain. I mean, the wind turbine supply chain in the United States is 500 businesses. It's not just the cost to produce the wind turbine, it's all the supply chain that goes along with it. So the problem with thorium is, while it may be productive in electricity, it takes a massive amount of fossil fuels to make a thorium reactor possible. You cannot make a thorium reactor with thorium. You can't, because the trucks that transport the equipment to make a thorium reactor, they have tires. Well, those tires are made with petroleum. And then all the different things that go into a truck are very expensive. And so this is the problem. The thorium isn't a solution. Unfortunately, the thorium reactor just makes the system more complex. And as Joseph Tainter, in his famous book, The Collapse of Complex Societies, the more complex you get, the quicker you get to the end and the faster you collapse. So technology, unfortunately, Dunnigan, isn't solving our problems. It's just making them worse. And as you know, the technology is getting very fragile today. And so this is kind of the logic people need to start thinking about. And so that's the problem with uranium, thorium, even wind and solar. They're not solutions, because right now the world is consuming 88% fossil fuels, and most of the other is hydropower. Wind and solar is still a fraction. There's no way we can transition, especially now that oil is becoming problematic, because then it's going to be hard to produce natural gas and coal, to continue making all this other stuff. And I think, because this is my knee-jerk reaction, you can't make a thorium reactor in a Star Trek replicator. You can't make a solar panel in a Star Trek replicator. They come from burning a massive amount of fossil fuels.
Certainly some of those steps in those supply chain processes that currently rely on fossil fuels could be converted to renewable sources, but not all, is your point. I think there's a significant segment of those supply chains necessary for development of some of these complex energy converters that still we don't have a viable path, a line of sight to how we're going to be able to convert those to non-fossil fuel.
Yes, and to tell you the truth, we have the green energy movement, right? And so they're saying the problems with fossil fuels, so let's move to green energy, and the solutions are wind and solar. Well, those aren't solutions. If you're going to have a solution, nuclear makes more sense, or uranium or thorium make more sense, because they're more stable. A nuclear reactor will continue to give you stable electricity. Solar and wind are very intermittent. And the problem isn't that bad when you add, let's say, you're in Texas and you add 5% or 10% wind or solar to that local area. That's not bad. What happens when the wind and the sun stop shining and blowing? Then you make up with natural gas balancing power. Well, when you add 50% wind and solar and the sun stops shining and the wind stops blowing, now you've got to add 50% natural gas balancing power. And that's what we're doing. And that's very expensive. And the battery technology to offset, to store that energy, it's too prohibitive. It's too prohibitive. We don't have the ability to store that much intermittent wind and solar power. And so they actually make the situation worse. And if you go to Germany and Australia, a lot of the countries that have added a lot of wind and solar, their electricity rates have skyrocketed. And so I got a very bad feeling, Dunnigan, that if a Biden presidency is really going to push green energy, and it's going to be a disaster, because the more we push it, the more we cut back on coal and natural gas, we're going to set the electric grid up for a disaster, because it's not going to be able to sustain the electricity if we push more for more green power, which is not really green. If it was a good solution, I'd say okay, but it's not a good solution. It makes the situation worse.
I think you're partially answering this next question from Voidgirl 1954, who says, how quickly will Canada and all other countries fall down the, quote, energy cliff? Will it be a long and slow grind or happen more suddenly?
As I mentioned, it seems to me that the Seneca Cliff is a good it's basically a good equation or guideline for the way complex societies tend to build and then decline. We don't see the empires just kind of slowly fizzling out. Civilizations tend to build very long and steady, then they collapse, and that's just the way it is. Now, I believe the debt is offsetting and hiding a lot of the issues of the falling energy return on investment. So when the debt implodes at some point in time, so will the assets. And then here's the thing. People think, well, what if the oil price goes up to $200 and the gas goes up to $10, $15? It doesn't have to do that. The gas price could be $1, but if you got 50% unemployment, who's going to be able to afford that dollar of gas? That's the clincher, what people don't get. Now with all this unemployment, they can't afford that gas unless there's stimulus checks. So I think the issue is I see over the next 5 to 10 years, by 2030, the world will look like a much different place. And I believe with U.S. shale oil production down 75% by 2030, it's going to negatively impact Canadian oil sands, because we have to blend that with shale oil. Mm-hmm. I think we're going to see. The beginning of this energy cliff. It's starting already with the pandemic, and it's not really going to recover. We're going to see a much different world by 2030, and especially because this debt is not going to be sustainable.
Okay, so we've talked a lot about a new paradigm, a new way, a new lens for looking at the world and seeing the dynamic that has affected all organisms, including societies, throughout history. Looking through that same lens, what can an ordinary person or family do now to increase the chances of them being able to survive and thrive in the years to come?
This gets back to being more of a libertarian. If people have put their control into the system and the government, and that's because things have become so complex. You take for granted when you have gasoline you put in your car. And so now, Dunnigan, the issue is, as the energy becomes more problematic, people are going to have to take control of their life. And we see this in a lot of these survival collapse movies, right? There's like some kind of a zombie apocalypse. Well, people, you can't wait around for someone else. And I'm not saying this is going to happen tomorrow, but as time goes on, more and more people are going to wake up. And the best way to take care of yourself is to be able to grow some of your own food, is to be able to do things on your own. And it's the best way to do that is more in the country or in a very a suburban home that's got a decent property. You have to take back your life, to control of your life, because I think we're going to have serious issues with food in 2021. There were serious floods in China. And you probably saw the dam, the Three Gorges Dam there was time where we could have seen maybe the collapse of the dam. And so they had to cut all these levees downstream, and it flooded a lot of the farmland just to save that Three Gorges Dam. Well, is that going to be just 1 year? I think we're going to have continued problems with this. And so they're saying that there's going to be problems with food next year. So it's important that people take control of their life, not only with precious metals, with growing their own food, some of their own food, and just learning how to live with less and how to live with less complexity. I like technology. I like my computer, but I also have a big garden. I have an orchard that I take care of myself. I'm not saying everybody has to do that, but I think in time, families need to start thinking that way.
Steve, if people want to follow your work, where should they get plugged in?
All right, Dunnigan, I am at the SRSrocco Report.com. I have some public articles, but I produce a lot for the silver and gold members. I also put out YouTube videos and describing this information and showing what's going to happen with the energy and kind of where I see the value of the precious metals and assets going in the future. So that's where you can find me.
And folks, just to remind you that you need to sign up for our free newsletter at libertyandfinance.com. Just put your name and address in the left-hand border there when you get to libertyandfinance.com. That way we can stay in touch. You'll get the Steve's article here, his interview, as well as the description and any notes we have and any links. And for all of our guests, the same thing. That way you'll stay in touch with us as we move forward, because many of our compatriot independent journalists have been deplatformed off of YouTube. We don't know if that's going to happen to us, but if it does, how will you find us? You'll find us by staying plugged in with our free newsletter. We've been speaking with Stephen St Angelo, the founder of the SRSrocco Report, here on this Thursday, December 17th, 2020. Stephen, thank you for joining us this first time.
Thanks, Donnigan. It's been a pleasure. Have a good holiday.
If you've decided that now is the right time for you to protect your family's financial future by acquiring physical precious metals, gold and silver, I'm delighted to let you know that I have now become a licensed dealer's representative for Miles Franklin, one of the oldest and most trusted names in bullion dealerships. And we can provide you with physical delivery to your personal possession or to professional vault storage or precious metals IRAs. Just email me at libertyandfinance@protonmail.com, and please include your name and phone number in your email to libertyandfinance@protonmail.com. We'll get right back with you and find out how to best meet your needs so that you can either begin or increase your acquisition of physical precious metals now and protect your family's future starting today. To acquire gold and silver, just go to libertyandfinance.com. When the main site comes up, click on Bullion Sales. That's libertyandfinance.com, Bullion Sales. You'll see my name, Dunnigan Kaiser, my phone number, and my associate, Kaiser Johnson, his phone number, our email, libertyandfinance@protonmail.com.